Financial markets have had a challenging start to the year, but despite January's volatility, the economic outlook continues to provide opportunities for investors. The global economy is rebounding vigorously from the pandemic. Last year, world GDP expanded by more than 6%, its fastest pace in 5 decades, and this year global growth is set to remain strong at 4.7%. Omicron is more infectious than earlier variants of the virus, but its emergence has had significantly less impact on economic activity. The key risk to the outlook comes from the Federal Reserve tightening policy to curb inflation. This has increased volatility sharply this year. The threat of Russia's escalating standoff with Ukraine is also weighing on sentiment. We expect the Fed will raise interest rates 4 times in 2022, a relatively slow pace of rate hikes. Though consumer prices are rising by 7% in the US, inflation is likely to peak in the next few months as supply disruptions ease. Inflation expectations also remain anchored around the Fed's 2% target. Thus, we do not expect the Fed to shock financial markets. But the risks are skewed towards the Fed tightening policy at a faster pace if inflation remains stubborn. Higher oil prices may also boost inflation expectations. Thus, uncertainty over the speed of Fed rate hikes suggests investors should take a more cautious overall stance on risk assets. We therefore move our overweight positions in US equities and emerging market high-yield bonds to neutral. We also recommend an overweight position in hedge funds, an asset class that is better suited for periods of higher volatility. Strong global growth, however, will continue to provide opportunities for investors. China's economy suffered a sharp slowdown in the second half of last year. But interest rates were cut in January for the first time in almost 2 years. As China's growth picks up in 2022, Asian growth more broadly will remain supported by strong exports. We thus recommend investors become overweight Asia ex-Japan equities, in line with our broader view to maintain exposure to risk assets as global recovery from the pandemic continues. For more information, please read the latest edition of our monthly investment guide titled Winds of Change.